I am Troy McGuire, co-founder of FinTech TV, and Taking Stock starts now.
Two minutes to the close here on Wall Street at the trading floor of the New York Stock Exchange on this Friday, March 6th. We are expected to see several of the major market indexes finish not quite at session lows, but to be quite honest, not very far off either. This after an enormous swing and miss for the February jobs number, where Wall Street analysts were expecting a positive print of somewhere between 50 to 60,000 jobs, and instead we got a negative print, minus 92,000, plus additional downward revisions for December and January. That set the tail of the tape off the opening auction, and we have not turned around. Ahead of the close, we are expected to see the S&P 500, the Dow, the NYSE Composite Index, as well as the small caps finish down with a fair bit of profit taking on this risk-off Friday. Energy and staples, those are your best performing sectors in the S&P, and to be quite honest, my friends, they're the only of the 11 sectors in positive territory. Our sector laggards include financials, materials, as well as discretionary. Welcome to this Friday jobs edition of Taking Stock. I'm your host, JD Durkin, moments away from the ringing of the iconic closing bell down here on the trading floor of the New York Stock Exchange. All 7 of the so-called Magnificent 7 tech stocks in negative territory as we head into this weekend. Treasury yields down across the board tells us we did have at least a little bit of rotation into fixed income. We got ServiceNow and Toast and the next seat set here to do the honors for closing bell. Brad Bernstein of UBS Wealth Management's on deck. He'll join us right after this. Time for the close. And there you have it, folks, on this Friday, March 6th. Not a very pretty tape, to say things frankly, here across the major market indexes. The S&P 500 will finish down 1.3%, the Dow 30 down about 1%, the NYSE Composite Index down 1.1%, and as is to be expected for a risk-off, more defensive rotating tape today, the Russell 2000, the hardest hit of the majors, down 2.3%. The big story continues to be oil and energy stocks. West Texas topping 90 a barrel at this hour. Brent crude, the global benchmark, topping 92. We are watching that crucial psychological mark of $100 a barrel. We've been talking about it all week. Not quite there as we head into the weekend, but certainly something we'll pay attention to when we open things up on Monday. Let's bring in our first guest. He joins us remote. A very special welcome to Brad Bernstein, Managing Director, UBS Private Wealth Management. Brad, it's great to have you here today. Let me get your take first and foremost on what was probably one of the biggest drivers here for price action today. That's a huge swing and miss for the February jobs report. Nowhere close to Wall Street's expectations. Brad, in your estimation, what happened and how did investors react?
So the headline number was awful. The revisions were not good. But the good news, and there's several parts that are good news, is when you look at the details, you see that the headline number was worse than the actual data. There were seasonal factors. There were also strikes in the pharmaceutical sector that impacted the numbers. What we prefer to look at is the weekly jobless claims. Weekly jobless claims have been holding up much better. And I think today's number was not as bad as it seemed. It also most likely gives the Fed some more ammo to potentially start cutting in the second half of the year.
Yeah, I mean, to be fair, we're also coming off a positive print for the month of January of a positive 126,000 jobs, so everything requires a little bit of context and necessary perspective. How does this underscore, if at all, Brad, next week's 2 very important inflation prints? We got CPI, I believe, on Wednesday, and then this day next week on Friday, the Fed's favorite gauge of inflation, PCE inflation.
I think those are all always important pieces of data, but obviously markets are 100% focused on oil, which is obviously has a very large impact on inflation. So the question will be, will the Strait of Hormuz next week, and this is what the market's really watching, will that start flowing with ships again, and will oil start to come down? Because that would be the most important, story next week that will have the biggest impact on markets, especially with inflation.
Yeah, Brad, in the lens of oil and energy, be it stocks or broader crude marks across the board, what are you going to be paying attention to that give you some sense of what comes next, the biggest catalysts in the ongoing oil story? It is an important one.
Well, I think, our base case is this conflict is not going to be very long for multiple reasons. Number one, the degradation of Iran's military and the unbelievable quickness that's happening, and also the fact that we have a midterm election this year, and the administration is not going to want to prolong this and have oil prices over $90 like we saw today. So I think the good news is that hopefully in the next couple of weeks we'll start to see some significant changes in the Middle East where oil will come down because the strait will start flowing again. We saw the administration today really start working on how to ensure ships so they feel safe traversing the straits, because 1/5 of the world's oil supply, as we all know, flows through the Strait of Hormuz.
Brad Bernstein, Managing Director at UBS Private Wealth Management. We'll have to leave it there. Brad, next time, come join us down here on the trading floor. It'd be great to do this in person, and enjoy your weekend. All the best to you as we wrap up on this Friday. We're going to continue to walk this way. We'll bring you the top analyst calls here on Wall Street on this Friday. First up, CFRA analysts upgrading Netflix to buy from hold, pointing to incremental revenue growth for the streaming giant for 2026. Netflix shares up about 4% so far here year to date. Next up, Wells Fargo reiterating Intel as equal weight. They are adding what's known as a tactical positive call to the stock. Intel shares down for the day, but still up 18% so far from the start of 2026. And finally, Jefferies reiterating Oracle as a buy. We got that call early this morning before the open, lowering its price target, however. There's what's interesting. They lowered it to $320, saying, however, it is sticking with the stock ahead of Oracle's quarterly results set to report next week. Oracle shares down about 20% already here year to date. Speaking of stocks in negative territory, Todd, we're going to start here with our look at notables. How about CMG? This is Chipotle, down 4.5%. This despite the fact that analysts from D.A. Davidson say Chipotle is getting its mojo back. That was their words, not mine, but I do love that reference. They say Chipotle is likely to deliver a significant comp rebound. Shares are down about 4% for the year, but the average one-year price target sits at about $45 a share off these levels. That's another upside potential of about 25%. And then this is the big one Brad Bernstein from UBS and I were just talking about. How about this ETF, USO? This is the U.S. Oil Fund. It's an ETF that tracks the daily price movements of light, sweet crude oil specifically. This thing has been trading in an absolutely parabolic fashion, up about 35% in the last week and a half, now trading at its highest level going all the way back to January of 2020. With geopolitics, with the uncertainty, with the conflict raging in Iran and parts of the Middle East, the oil story is without a doubt probably one of the, if not the single most important part of the broader financial markets to pay attention to as we come into Monday's session. Ashley Mastronardi of the New York Stock Exchange sat down with EOS X Space CEO Camille Carbacci to talk all about his vision for the future of tourism in outer space. Take a look.
EOS X Space is in the business of space tourism, and they have some exciting updates to share, including an acquisition of fellow space tourism company, Space Perspective. Joining me now is their founder and CEO, Camille Carbacci. What is EOS X Space?
EOS X is a global company, is a global leader company in the near space category. In the space tourism, you have three categories: the orbital flight, suborbital, and near space. It's a low orbit. The EOS X Space is the global leader. Is the founder is a European company, but now is the acquisition the US company. Now it's the biggest company, the headquarters, the move in a US country.
How accessible is space tourism? Can I go to space?
Yeah, it's different. EOS X is different to another player. Why? Because technology is different, it's very accessible, and is different to another player because my technology is no rockets, it's a capsule of pressures and balloon. This is different to development technology, more safety and more easy, for development. In this experience is more than 5 hours, is the flight and journey with a guest, but included the program of 1 week in the space resort in the 3 regions. Now is open the region in the Middle East, in the Abu Dhabi. The second second the region operating is in Europe, in Spain, in south of Spain. And the third, more important now, headquarters is in Florida, south in the Space Coast in US.
Where do you see space tourism going in the next 20 years? Can somebody one day, do you think, buy a ticket to go to space like they do for a plane?
This is the decade of the space tourism. No, the private sector of the space industry is in growth in this decade. In our company, is more easy. No, the ticket size is a 200,000 K for passenger, and included the holistic program for 1 week. And in 20 years, of course, it's different. No, the NASA or the European agencies cost more than 100 million for each passenger. Now the cost is more low. No, it's accessible for many people. No,
And what does the acquisition of Space Perspective mean for EOSX Space?
Yeah, this is the acquisition and strategic movement. No, the technology they integrate both technology with the European company and US company. All the asset technology, because in US is the knowledge and development and manufacturing is very growth now, and in innovation, my company in Europe, and they integrate the both company because it's operating the commercial flight to the end of the Q4 of 2026.
And where does the company currently stand in its commercial launch?
The commercial launch is 2026 on the December of this year. Is a commercial nothing. It's in 8 months.
Tell me more about that.
Yeah, and I'm the first flight with the pilots. Yeah, the pre-commercial flight, and then on to December for this year is the first flight, and with the passenger.
All right, and you'll be going to low Earth orbit.
Yeah, it's a low orbit because I explained it's the 3 category. SpaceX is the orbital flight, is the more than 100 kilometers with the ISS station in international space. The suborbital flight Virgin Galactic is the 16 kilometers. My category is the low orbit or near space is the 14 kilometers. In total, the journey is 5 hours. And you look to the 99.5% to the planet in my category. This is the experience, very experiential, comfortable, safety. Don't have 4G. The similar you go to the first class on the airplane.
All right, Kamel Karbacci, CEO and founder of EOSX Space. Thank you for joining us at the New York Stock Exchange.
Thank you so much.
Welcome back to the show. Time at this hour for a few fintech, crypto, and artificial intelligence related headlines to head you into your upcoming weekend. First up at this hour, the crypto majors are all down in a pretty notable way. Bitcoin trading down 3.8%, ETH down 4.4%, Solana down 4.6%. Bitcoin right now, as of a few moments ago, 68,154. That's its Friday afternoon level. Next up, the Intercontinental Exchange, better known as the parent company of the NYSE, is set to buy a stake in crypto platform OKX. It's a $25 billion valuation. This comes as Wall Street moves to integrate digital asset infrastructure into traditional markets. And finally, Morgan Stanley Investment Management set to file with the SEC for 2 crypto products, not 1 but 2, a Bitcoin trust with Coinbase as custodian and a separate Solana trust as traditional finance deepens its push into digital assets. Longtime friend of the show joins us down here on the trading floor of the NYSE. John D'Agostino, head of strategy at Coinbase Institutional. Let's start right there, John, with those 2 announcements. How about the first one, Intercontinental Exchange and OKX? What's most important to know about the deal? What do you make of it?
I think what's most important to know is who's doing it. So if you're as old as I am, you remember that Jeff Sprecher, the CEO of ICE, phenomenal CEO, I think one of the country's greatest in the last 50 years. He built ICE because he understood that the company I used to work for, the New York Mercantile Exchange, was slow in embracing the next generation of capital markets. They were slow in embracing electronic trading way back in 2002 versus open outcry. And he realized there was a tremendous opportunity to leapfrog and evolve past open outcry. So the question you have to ask yourself is, the guy who saw open outcry evolving to electronic trading is now betting on prediction markets, and blockchain-enabled technology. So I'll leave it to you and your viewers to figure out what that means in terms of how accelerated this institutional adoption is for blockchain capital markets.
Yeah, of course, you and I are having this conversation on a pretty iconic trading floor. It used to hold 5,000 to 6,000 brokers doing open outcry every day. Now we're about 82% electronic trade volume. Still room for the human auction makers and the DMMs for sure. Let me get your take on the Morgan Stanley investment. Not one, but two crypto products. What stands out to you on that one?
Well, what stands out is two things. One is Coinbase, we're thrilled they chose Coinbase as a custodian for that ETF. But I think I said it on this show one time before, it is almost unthinkable as to how successful the Bitcoin ETFs were when you consider that until very recently, they were not allowed to be sold. So we can imagine that. Imagine the single most successful ETF in US history, and yet the financial advisors, the thundering herd, if you will, was never allowed to pick up the phone and call a client. They had to wait to be asked for the product. Now that those handcuffs are off, and you've got the biggest of the beasts, Morgan Stanley, about to unleash all of those advisors around this incredibly successful product.
John, for all the conversation we've had about the regulatory rules of the road down in Washington, D.C., shifting in a way that's a bit more favorable to the crypto industry, we're still awaiting updates specifically out of the U.S. Senate for the so-called Clarity Act. JP Morgan, many others say, hey, we still expect this thing to pass between now and the midterm elections. What's on your horizon? What will you be paying attention to as that drama, and there's plenty of drama involved, plays itself out?
Look, there's always going to be drama on something this substantive, right? This is market structure is a lot more challenging than stablecoin regulation, and the Genius Act had some drama as well. People think it passed through easily, but there was some drama at the end. So this is how this stuff works. It's a big, important bill. It should be taken very seriously. We are very, very confident. We have great support from the White House. You know, I just had the chance to hear Patrick Witt speak. We have a phenomenal representative leading that charge there. Deeply understands the tech, understands what's important, and ultimately it comes down to American consumers being given the option and the choice to get better interest rates through a safer one-to-one back stablecoin narrow bank type vehicle, and I know we'll get to the right decision.
Yeah, we had Patrick Witt down here on the show. He stood right where you stood earlier in the week. It was an amazing interview. We brought our viewers. Yeah, he's a bit of a tall guy. Yeah. Before I let you go, more broadly, let's take a step back. What are you seeing for this price action? A lot of people are saying, hey, it's happening at the same time as, you know, more institutional adoption, but we're still down 46, 48, 50% off those early October highs.
I understand. Look, it's a volatile asset. Since the Iran war started, it is performing better than gold to that point, but I think you have to look at these things over time. If it's a hedge against monetary debasement occurs over decades, not weeks or months. So dollar cost average in, be thoughtful, choose good providers, and stay patient.
John D'Agostino, good friend of ours here on Taking Stock, head of strategy at Coinbase Institutional. My man, you know you are always welcome down here to make the case, and thanks a lot for joining us.
Thanks, buddy.
Don't go anywhere. Much more Taking Stock from the big board coming up after this. Welcome back to the broadcast on this Friday edition of Taking Stock. We are down here on the trading floor of the New York Stock Exchange with our third guest of the broadcast. Say hello to Dr. Rebecca Boudreau, President and CEO of Oberon Fuels. It is really nice to have you down here.
Thank you so much. I appreciate the invitation.
An energy company that makes a cleaner fuel with, I would say, some surprising uses. This one really jumped out to me. For instance, aerosol propellants.
Yes.
What does that mean for a company's emissions profile?
Yeah, so aerosol propellants is something we don't think about, but it was actually an innovation that came out of World War II. So when the soldiers were combating malaria, they developed an aerosol to spray mosquito spray on the troops, saving their lives of malaria. So now we may even remember back in the COVID pandemic, we were spraying everything that would move with Lysol. Well, that's an aerosol, and you can actually make it out of waste from trees. So we are doing that with renewable DME.
You brought us something. This is very cool. Please, correct me if I'm wrong. Dimethyl ether.
You nailed it. Good
What
job.
is it all? Science was a decent topic of mine, but not my strongest subject in school. What is it all about?
So dimethyl ether, or we call it DME for short. So in the middle, the red is an oxygen.
Okay.
The two black circles are carbon. On the outside, you have hydrogen. And this molecule, you can make it from any carbon source. You can make it from tree waste. You can make it from animal manure, all kind of different sources. And you can use it as a fuel, as well as you can use it as an aerosol propellant.
And you started commercial production of this, at least in a renewable way. Why does that matter? And talk to us about the significance of that development.
Yeah, it's significant because industries continue to innovate, right? So we started from World War II and helping soldiers combat malaria. Now we're talking about how can we do this better? Innovation keeps doing things in a better way. And so making it from trees, so when you use these products, companies like L'Oreal, who announced that we're part of their incubator, we were selected as one of 1,000 companies globally that they'll be testing our renewable ingredients for their products.
I'm glad you mentioned the L'Oreal news because I was wondering to what degree the luxury market is committed to finding sustainable solutions. So what should people know there about the relationship and the work a brand like L'Oreal is trying to do to improve the general space?
Yeah, L'Oreal is doing amazing work. They put over 100 million euros to work for a new accelerator program to help renewable innovations, whether it's in packaging or molecules, chemicals, to reach the commercial market, and they're really committed to this. We're also working with Airpress, one of the U.S. leading distributors and manufacturers of aerosol propellants and refrigerants, and they're continuing to innovate and just announced a new line of renewable propellants, including DME.
That's amazing. Congratulations on
Thank
the
you
work
so
and the
much.
well-deserved recognition from
I appreciate
L'Oreal.
it.
Before I let you go, what does corporate ESG targets or ESG compliance look like, even over the course of the next few years, let's say between now and 2030?
Yeah, so, as we think about ESG, how are companies doing better, reducing emissions, at Oberon, we're really committed to providing a lot of different solutions. We convert waste to value. Renewable DME is one of them, but we're finding other ways with methanol, hydrogen, natural gas, so helping companies reach their goals.
Dr. Rebecca Boudreau, President and CEO of Oberon Fuels. Thanks for bringing the little toys by. It's great to have you, and thanks for joining the broadcast.
Thank you so much, JD.
Enjoy your weekend. Don't go anywhere. Much more Taking Stock coming up right after this. Welcome back to the show. Time for a few startups, raises, and rounds headlines to send you off into your weekend. First up, Science Corporation, founded by former Neuralink president Max Hodak, set to raise $230 million at a valuation of $1.5 billion as the company races to bring a chip designed to restore vision in blind patients directly to market. Next up, New York-based startup Sage raising $65 million to expand its own AI platform that uses room sensors and software to detect distress in senior care facilities, cutting caregiver response times. And finally, in startups raises and rounds, diagnostic startup Droplet Biosciences set to partner with the one and only NVIDIA to use GPU-powered AI to analyze genomic data, shortening the time to detect residual cancer after surgery to as little as 24 hours. And at this point of the show, we're bringing the latest from Scarlett Sieber at Money 2020. She is now back to explain how fintech companies really, and I mean really, make their money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Ever wonder who actually powers the global business? Enter AirWalleX. AirWalleX is a global financial infrastructure platform powering cross-border money movement for everyone from startups to platforms to multinationals. AirWalleX built its business on one idea. Global finance shouldn't feel global. It should feel instant, and ideally it should feel less like wrestling the FX rails and more like clicking a button. Behind the scenes are multi-currency accounts, FX engines, payments acceptance, card issuing, and treasury tools stitched into a single API. Think finance, but finally efficient. So how does AirWalleX actually make money? First, FX and cross-border spreads, their core engine. Every time money moves across currencies, AirWalleX captures a margin. Second, payment acceptance, merchants processing fees across cards, wallets, and local methods. Third, multi-currency wallets and treasury, float, movement fees, and premium treasury features. Fourth, card issuing, interchange from spend plus issuing fees to the business embedding the cards. And finally, enterprise API usage, volume-based pricing for payouts, collections, and embedded fintech modules. Let's do a momentum check for a second. AirWalleX crossed a multi-billion-dollar valuation off the back of enterprise adoption in Asia, Europe, and the US. It continues to expand into card issuing and global payouts at scale. So what is their moat exactly? Global license, deep local settlement networks, and a consolidated stack that replaces half a dozen vendors for a CFO running international operations. That is called efficiency. AirWalleX monetizes globalization, move money, take the fee, reduce friction, repeat. They're not selling payments, they're selling borderless finance. And that's how AirWalleX actually makes money. Have a company you want us to feature? Drop it in the comments and maybe we'll feature it. Back over to you.
And on this Friday, March 6th, the broader markets across the major market indexes will finish down in no uncertain terms. The Dow Jones Industrial Average down almost a full percent. The S&P 500 will sell off 1.3 to end the day and end the week in notably negative territory. The New York Stock Exchange Composite Index will sell off on this Friday 1.1%. And as is to be expected, the Russell 2000, the hardest hit, down 2.3% for this risk-off Friday. Energy and staples, those are your only leading categories in the S&P 500, with your laggards including financials, materials, as well as consumer discretionary stocks. WTI and Brent both up on the day, reaching levels we have not seen since the summer and fall, going all the way back to 2023. Boeing and Amgen really only your positive Dow names, at least up notably. Amex, 3M, and Caterpillar down in negative territory. As for what's going on here on Wall Street, next week we get earnings from names like Dollar General, Oracle, Kohl's, Adobe, and Ulta Beauty. And we will get data including CPI print Wednesday and PCE next Friday. That's going to do it for this Friday edition of the show. Have a good one.